Let's go.
Okay, so first off, welcome back, fellow safe investors. What's going on YouTube? If that's your first time to my page, hit the subscribe button. Please hit the like button. It definitely helps me out. But yeah, this is a little special I'm doing called Battle of the Brands. If you haven't seen it already, I did a video on Tesla where I analyzed Tesla, everything about Tesla, and pretty much did an in-depth look into Tesla, financial statements, all that stuff. If you haven't seen that video, you can hit the little tab in the corner. So I couldn't honestly find a company that truly competes with Tesla, because Tesla, yes, they do make automobiles. You can say that they are in the auto industry, but to be honest, I would really put them more like in the technology sector than the auto industry. And when you see what company I put them up against, and I pretty much made the case for this company, you'll kind of understand it a little bit more. So it's more to this story that meets the eye. So the company that I'm going to compare against Tesla is General Motors. So for those of you who do not know, General Motors is a automaker. They are America's, not the world's, but America's largest automaker by manufacturer standards. They manufacture, I think, about 9 million vehicles a year. Toyota's is like the world's top manufacturer, but General Motors is America's top manufacturer. They have like 16.5% of the auto industry market. And I would have picked Ford because Ford has like the #1 sold vehicle, which is the Ford F-150. They have more revenue. But I picked General Motors just because it's just better equipped to go up against Tesla. And I picked General Motors because between those two companies, General Motors actually have one vehicle out of their whole entire lineup of vehicles that actually does have a fully electric vehicle. And it's just one vehicle. So pretty much, I'm not going to give you too much about what General Motors do. Pretty much, General Motors, they have like GMC, Cadillac, Buick, and Chevy, all the names that you know. And they also have a couple companies that they either own or have some stakes in China and Australia. So they are big, they are worldwide, they sell vehicles all around the world. Not only that, they have military contracts, all of that stuff like that. But the point that I really want to stress in this vehicle isn't like what the company do and understand this company, because this is a pretty simple company. They make vehicles, they are the #1 manufacturer. Yes, all of that is good, but the point that I really want to get across in this vehicle is, the point that I really want to get across in this video is how sometimes you might, let's say, misanalyze a company, and then like, pretty much the point that I really want to stress in this video is the analyzation of this company. Because if you pretty much just look at the market cap, the price to earnings ratio, the earnings per share, and the revenue that this company brought in, you might think that this is a steal. Like literally, and I'm not lying, like a lot of people might think this is a steal. And what plays into a lot of a company's share price, or how much you're paying for that share price, it's a lot of factors. It's more than just one. It's more than just them bringing in earnings per share, which is profits. It's more than them just paying out a dividend. It is more to it than meets the eye. And a lot of times it's just popularity. I'm not gonna lie. Like look at a company like Zoom, ticker symbol ZM. You know, I would definitely say that's more hype. But I don't want to get off track. So I'm gonna walk you through this analyzation of General Motors, and I'm pretty much gonna give my take on it and pretty much give you some tips and hints to look out for a company that you might be looking at incorrectly or might not thoroughly giving it its like detailed look. So we're pretty much gonna go through it and just stay tuned pretty much. So, so General Motors, ticker symbol GM, has a market cap of $40 billion. They're selling around $30 a share right now. They have an earnings per share of $3.27, and they have a price to earnings of $8.92. So just based off that alone, for any other company, that will be great. And then, not to mention that they have a revenue of a little over $130 billion. So when you take $130 billion and you factor that against a market cap of $40 billion, to put that in simplest terms, that's like me telling you that I have a company that brings in an annual revenue of $130 billion a year, $130 billion a year, and I'll sell it to you for $40 billion because the market cap is what the company's valued at. So that's one way to look at that. So that's one way why you might think the company is undervalued. Another way that you might think this company is undervalued is the price to earnings and the earnings per share. It's bringing in $3.27 per share. It has a price to earnings of 8. That's pretty low compared to a lot of companies. So that's another way to look at this company, and you might think it's undervalued. Not to mention that they have a price to earnings growth of like 1.59 or something like that, if I'm not mistaken. So a lot of signs would definitely point to this company being undervalued, but I definitely want to tell you that it's not, because the way that things are trending, and then if you just look at General Motors history, just General Motors within itself and its own history, like when you look at their financial statements, their income statement, they have been losing revenue for the past 3-4 years. So it's not like that 130-something billion or whatever is going up. Like they're actually losing money year over year. They're losing market share. Like in 2014 to 15, they had 17% market share. Now they're down like 16.5% market share. That's still a large market percentage, but it's going down. So everything about General Motors company has been going down, and like I said, a lot of people might just look at the revenue side versus the market cap and say that this company is definitely undervalued. Especially like if you haven't seen my video on Tesla, you've seen that I mentioned that Tesla is selling for around like $800 a share. They only bring in like $26 billion a year, and they have a market cap of like $160-some billion. So that's a huge difference. But the thing to keep in mind is what drives a company's like market price, and it's pretty much people. People want to buy Tesla. People want to pay the premium for Tesla because of what Tesla could possibly produce in the future. I'm not gonna lie, the future for Tesla looks a little bit brighter than General Motors, but that's for another video where I'll compare these two. So back to General Motors, they don't have any electric vehicles other than one. It's the Chevy Volt, or Bolt, I should say. So they have the Chevy Bolt. That is their one fully electric car. And then if you look at the Chevy Bolt, it doesn't look that appealing to the eye. I'm just going to be honest, especially versus like any of the Tesla models. It doesn't look appealing. It's not getting as many miles to the full charge as any Tesla model. So it's not pretty much keeping up with its competition in Tesla. And then not to mention that General Motors is now trying to get into like the electric vehicle field. And I would definitely say it's a little too late, because if you think about it, they're a little late to the party. Tesla has already announced a full lineup from trucks to sedans to SUVs to semi-trucks, everything fully electric. They have a price point for pretty much anyone. Their base price point is, and I would definitely say this is affordable, it's like $30,000 for like the Tesla Model 3, and you're getting like 300 and some miles to a fully charged, and that's pretty much what my car is getting to the gallon right now on a full tank of gas. So Tesla is definitely evolving, and General Motors is just behind. Now, General Motors did announce that they have 20 fully electric vehicles to come out by 2023, and the Cadillac Lyriq or something like that will be the first one to release in the fall of 2021. But I don't think that's enough, and I definitely want to say that General Motors has been behind the ball on this one. I wouldn't put my money in it, even at $30 a share. The highest has been in the last 10 years has been $45 a share. So this company, although like if you just look at the price to earnings, the earnings per share, just look at the number side, you would think it's undervalued. This company is definitely not undervalued, even with it making 130-something billion in revenue and selling for like 40 billion as a market cap. I would still say that this company is highly overvalued just for what I'm getting, the return I'm getting on my money. And you can get a return on your money if they pay a dividend, but they don't pay a dividend. I don't see the price of the stock going above $45 anytime soon, because they're not giving anyone a reason to crowd in and buy their market shares up like that. So that's just that on General Motors. But it wouldn't be a video without looking into their financial statements. So let's go. So General Motors made $137 billion last year in 2019. They have $26 billion in cash, $33 billion in receivables. So that's probably cars that they send out to dealers and all that they just haven't received the cash back from that. $10 billion in inventory, $4 billion in like a other category, and it equals up to like $74 billion in current assets. All of that sounds good, but then when you weigh it up against their current liabilities, it's $84 billion in current liabilities. And I definitely don't believe that people are going to be buying any new vehicles in the immediate future. And even if they do buy a new vehicle in the immediate future, I definitely would say that they probably wouldn't lean to any one of General Motors vehicles, just because everyone is kind of like conscious of the environment right now and pretty much want to go electric, or if they can afford electric. But I'm not saying that they won't sell any vehicles. I'm just saying, in my opinion, I definitely don't think General Motors is going to continue going up in value. Even though it hasn't been going up in value, it's been going down in value. I think that's the trend that they'll pretty much continue on. But anyway, let's get back into the video. They have a total assets of $228 billion. Total assets, that's their property, plant and equipment, everything. Pretty much, if you liquidate this whole entire company, you can get $228 billion out of it. And their total liabilities is like $182 billion. And that's still not good in itself, because that's still close enough to that $228 billion. And I haven't looked that deep into this company, but I definitely would assume that they don't have a good credit rating. Like, a lot of companies have credit ratings where it's like they're stable, or they have like good credit ratings to where like they can go out into the equity market and receive money, or pretty much leverage some of their assets to receive capital, or like issue bonds and stuff like that. Now, like I said, I haven't looked too deep into it. So when we go on to the income statement, like I mentioned before, they had $137 billion in revenue in 2019. They was able to keep $6.5 billion in net income, so that's after they paid off everything. And that's not bad, right? Well, when you go to their cash flow statement and see that, yes, they was able to keep $6.5 billion in net income, but they have $23.9 billion in capital expenditures. It just gets ridiculous at that point. So in my opinion, I definitely wouldn't purchase General Motors even at $30 a share. I don't see any real price movement in that company, unless you can put like $10,000, $20,000, $30,000 into the company right now at $30 a share, and then ride it up to like $40 a share. Because the way that the market's been moving lately, like the whole market is still going up to like its norm before, like, you know, everything took that huge dip in March. And before the General Motors took the dip, it was trading around like $40, $41 a share. So like I said, unless you can get like $10,000 minimum, $10,000 bare minimum, and then that way you can get like a 10% return on your income from that. But you know, you will get like $1,000. It's just not worth it. I'm just gonna be honest. So leave a comment down below if you do want to invest in General Motors. I definitely want to recommend it. That's just my opinion. Like I already mentioned at the beginning of this video, hit the subscribe button if you already haven't subscribed. Hit the like button if you already haven't hit the like button. Just smash the like button. And there will be another video about other brands coming in the next couple of days, so be on the lookout for that. And let's do it.